Crocs is my biggest position, and next week it's going to publish its earnings report. And I think it's going to be very interesting because Crocs is at an interesting point of its history. They recently acquired Hey Dude, which is a footwear brand which was going like crazy. It was on fire a couple years ago, but then it slowed down very fast. And recently it's not doing very well, and this is scaring the market. The market is giving Crocs a very low multiple. In my opinion, a big reason why is the acquisition of Hey Dude, which is not performing well. But they announced some important changes, as I told you in this video. They announced that Terence Reilly is going to become the president of Hey Dude, and this guy is a marketing genius. He had success with Crocs and then with Stanley Cup. So perhaps things are turning. In my opinion, there are some positive signs. I'm monitoring Hey Dude's Instagram, and some posts have gone viral. They got lots of comments and lots of views. So engagement is growing, followers are growing. So maybe things are turning around at Hey Dude. But we will need to see if this growth in engagement is converting into revenues, if they are actually selling products. I'm hoping that management is going to give some insights about the turnaround of Hey Dude, how things are going, and probably the market would like to hear about the plan for the future. So I'm gonna watch this very closely. Furthermore, Crocs brand is doing great. As you can see right now, the Google trend looks very good at an all-time high. So it seems like the main brand is doing perfectly fine, and this could be amazing. It could mean that the company is going to beat on earnings, and perhaps they could raise their guidance, because management is always very conservative on the guidance they give, so perhaps they could rise full year guidance. Other than this, something I'm going to monitor is how they are dealing with buybacks. If they perhaps are going to tell us what they are going to do in the future, because they can influence the valuation a lot. If they're going to buy back stock at $80 or $100 per share, it's one thing. But if they are going to buy back stock at I don't know, $150, $200 per share, this is gonna be a problem. It's gonna influence the valuation negatively. So we have to be very careful with this, but we have to say that right now Crocs valuation is extremely low, with a forward price earnings ratio around 10 or 11. And keep in mind that the footwear sector usually has a forward price earnings ratio between 15 and 25. And Crocs right now is the #1 company as of EBIT margin. Their EBIT margin is unmatched, so the company, in my opinion, should deserve a premium. So perhaps the stock could reevaluate if things at Hey Dude are doing better, and the price earnings ratio could reach 15 or maybe even 20. Who knows if Hey Dude could start growing back again. So I'm very excited about the coming earnings report. I don't know how it's going. I've seen in the past Crocs reporting good numbers and the stock plunged anyways. I saw it down 10, 15, 20% on good numbers, so I don't know how it's going to work out. Perhaps they will publish good results but the stock will plunge, or perhaps it will rise. But always keep in mind that when you analyze an earnings report, you have to focus on the fundamentals, you have to focus on the numbers, on the results. You don't have to look at the stock. The stock can react in a crazy way for a small little detail, but you have to focus on the big things, on the generic view. So don't let the market trick you. And this is worth for every earnings report, for every company. That's it for today. Please remember to leave a like and subscribe to my YouTube channel if you're new, and let me know if you own Crocs in the comments. See you next time. Bye!